For those of you who watched the video earlier today, I had to laugh because I chastised CNBC for reporting that the market was headed down after the Fed minutes, because by the time I was looking at it, the market was headed up after the Fed minutes. But then by the time I uploaded the video, the market was headed down and ended down pretty badly after the Fed minutes. Well, for those of you who uh, I'm not going to repeat what I said earlier today in that particular video, other than to say, check out the episode. But after a bit of churn, the bond market decided to pop up. The yields, that is, were up. Then NASDAQ decided to take another day off and head down. And Tesla, being the good child that has been pretty much all week and last week too, just kind of followed along and ended up well down. So how to explain all this? This is Randy Kirk. If you get anything out of these videos at all, please hit the like button because it helps with the algorithm. Thank you very much for a new Patreon member signing up today, and I would encourage all of you to sign up. And then hit subscribe and notify. Okay, here's the deal. I finally got the setup all 100% done with regard to the next couple of days. Brian will be on Thursday about this time. Jeff will be on Friday afternoon around 4 PDT. No, that is incorrect. He will be around 11 PDT. And then to wrap it up, Larry will be on Saturday morning. Now, these are parts 2, 3, and 4 of the series about Asia's influence on the world economy, the potential for war between China and Taiwan, and what all of this means to Tesla and the broader market. You shouldn't miss a minute of this. CNBC should be so lucky to have the talent that is going to be participating in this series. So after doing some yoga, centering myself, being present in the moment, and microdosing, I think I figured out what happened today. Of course, I don't do any of those things. There is a war going on in the minds of almost all investors right now. You need a strong economy to create earnings, and you need earnings to get the bull market going again. So all the good, even great news about the economy today should have the Dow up 400 points. Well, we'll talk about all that good news in a minute. Then you have the inflation issue, which I thought was a done deal, was over. Nobody going to talk about it anymore. Some will theorize that if the business sector gets too hot, we'll have inflation back since we have no labor for the increase. And that will trigger the Fed, which will create higher rates. And then the yields will go up, and that'll kill the business sector growth. Well, in essence, the market doesn't know whether to wish for a slowdown or a great economy. We're back to that deal we had a month ago. It's good news, bad news, and bad news, good news. And historically, you don't get both a great economy and lowering inflation at the same time. But you know what? We're not dealing with a moment like any other in history. And I'm claiming that nobody is playing 4 moves out like they should be. That means the Fed, the US government, the Treasury, and most of the investing community, and the pundits and analysts. So let me talk about the basics one more time. And I'm sorry, I've been thinking about this, and I have another way to speak it out here. So give me a minute. To get inflation, you need various aspects of your bill of materials to go up, forcing you as a business owner to either make less profit or charge more. Most businesses will try to charge more. Then this happens all over the place, and you get worse inflation. The Fed was not, however, concerned about transitory inflation where it lasts a quarter or even a year. They were worried about inflationary expectations that then drive consumers to act in anticipation of inflation and businesses to raise prices more confidently. Then labor says we need to keep up. And then this cycle just keeps repeating itself round and round. And then you get to 4%, 5%, 6%, and it's all built into the system. And the Fed doesn't want that. Well, but I'm sorry, the consumers have no such expectations. Business owners have no such expectations. They poll companies, business owners, and they poll consumers, and both of them say they don't have expectations for crazy inflation going forward, more like on the order of 3%. So let me talk about a few things. Number one, commodities are low and going lower. You can look at the numbers today. Right across the board, copper and silver and gold, and just keep going. They're all going down, and they still have a lot more room to drop. Oil has been the one outlier, but it is now starting to go the other way. Also, it is now under 80 at like $79.12. And it's been heading down all last week from a high of about 84. So it could bust the inflation story if it went up, but right now, no, it's going down. Labor, I'm talking about all the things that go into making up that bill of materials. Labor, other than the new head of the UAW, I used the word fool. Why did I do that? Nobody is expecting or asking for more than 4% year-over-year raises. The consumer is expecting 3% inflation, so he's okay with a 4% raise. Nobody is going to be getting 4%. Nobody's going to get more than 4%, and lots of people are not even going to get 4%. So that is not going to be the issue. And then, of course, productivity. Randy with productivity. Randy, would you shut up about productivity? Well, no, because it's so critical. Productivity gains will also reduce this cost of labor. I've done several videos on it. The productivity gains are now locked in due to businesses now being able to concentrate on productivity. They were not concentrating on productivity because they were concentrating on finding employees, finding raw materials, finding transport, and trying to find orders in some categories. But now everything's smoothed out. They have time to work on productivity. With raw material and transport also being lower, that helps with productivity also. Okay, number 4, GPT and related new productivity benefits are going to help the market. Also, this is what Kathy Wood talks about all the time. We're seeing it in places like medicine and elsewhere, but you're going to see it across the board, productivity gains coming from technology. And number 5, companies have expected a recession for more than a year, so they are positioned right now to deal with one. They have more cash. They have less lending. They have money in the bank. They have inventory is settled out now. Everybody's kind of settled into a nice position. That doesn't mean everybody. There's going to be companies going bankrupt because of reasons. Who knows? It happens all the time. It doesn't have to be a recession in order for people to go away because they're stupid. Okay, so it might seem impossible. This seems impossible in the minds of many to have a full employment economy. What did I say? Economy? To have a full employment economy with a 3% increase in GDP and then have inflation continue lower or even have deflation. But that's where we are headed. And you're like, Randy, but that's never happened before. Well, we've never had an aging population like this before. We've never had an economy that was flooded with dollars to where people now, the average consumer out there has 4 times the amount of money in their savings and checking account that they had pre-pandemic. They have enough money to last them to the end of next year, even if they don't figure out how to cut back on spending. Maybe they'll spend all their savings, maybe they will, but they got plenty of money to do that. So the market is basically saying, we don't know which door is going to open, and markets hate uncertainty and confusion. Add to this that the government is providing zero. I'm sorry, I'm not a Biden fan, even though I think he did a great job with all this new manufacturing that's coming onshore for batteries and battery materials and etc. I think that was a great decision, and I'm going to applaud him for it. But where's the leadership from the top? Where's anybody saying about where they think the economy ought to be going, or what parts of the economy should be moving in certain ways? There's zero, absolutely nothing coming from the top giving us any kind of direction with regard to the economy. If you know something that's been said, please put it in the comments below. I'd love to know what the government has been telling us about their expectations for GDP growth, their expectations for inflation coming down, what they're doing in order to help any of that happen. Bidenomics, we hear Bidenomics. What does Bidenomics mean? You tell me in the comments below. What's the definition of Bidenomics other than the Inflation Reduction Act, which they admitted last week was poorly named? Okay, I'm sorry. I'm not ranting on Biden. I really mean it. I'd like to see leadership from the top helping to bully pulpit us a little bit in some way. Meanwhile, the government is spending money like crazy, creating the greatest threat, which I spent a lot of time on this week. The greatest threat is a credit bubble, or actually the busting of a credit bubble. This could really be a problem sometime down the road, which is why the Fed needs to cut rates. Okay. So the market was down, then up, and then down after the Fed minutes. And there was a lot of happy news, though, that should have made the market happy. So let's talk about the good news. There was a shocking uptick on housing starts at 3.9% up in a single month. That's not a year-over-year number. That is a 3.9% increase in a single month. Permits were only up 0.1%, but housing starts up 3.9. Why are housing starts up in an economy where mortgages are at 7%? Because there's a massive shortage and people are begging for more housing, and there's a 1.5 million unit shortfall compared to what is needed out there. So finally, the folks who build houses, the home builders, are out there starting to get a few more housing starts. Now, the permits apparently are in the pipeline. Apparently, there are more housing starts in the pipeline. We'll see what happens over the next couple of months. Then, total industrial production increased by 1% following declines in the previous 2 months. This is according to the Federal Reserve. Manufacturing output rose 0.5% in July. The production of motor vehicles and parts jumped by 5.2%, while factory output elsewhere edged up 0.1%. Mining was up. Utilities climbed by 5.4%. Why was that? Because of this heat wave that we had, this dome, this weird dome that we had over the Southwest all summer, killed my bicycle business. You guys may know I still sell products on Amazon for the bicycle industry. My client who's in the bicycle industry also had a very slow summer. Nobody goes out and rides a bicycle when it's 105. I'm sorry, it just doesn't happen. So, all right. So, but did you notice that the utilities and the infrastructure were able to handle it? You didn't hear people talking about brownouts and blackouts as a result of this huge load that was put on the system, either in California or Texas, which are the two that have had the problems in the past. So next, at 102.9% of its 2017 average, total industrial production in July was just 0.2% below its year earlier level. That's really good news for the economy and should have made the market go up. Capacity utilization moved up to 79.3 in July. That's only 0.4% below its long run average. That is excellent, and it's increasing. Super good news. The economy, that should be moving markets, but it isn't. Why isn't it? Focus has moved back to interest rates, even though nobody thinks rates will go higher. But I think the street feels now that they need to drop because of the credit bubble. There's also concern about China, which is weighing on oil prices. That's good and bad because we want the oil prices to come down, but we don't want China to go into a ditch. China then would have less demand for American products. They may not be able to pay their bills. But anyway, you get my point. All right, the market didn't care about any of that good news. What they cared about was the Fed minutes and the uncertainty about what happens next. Meanwhile, Tesla is in a news dearth. Sightings of Cybertrucks and Model 3 Highlands, rumors about both, but no real news. Good news, little pieces of good news about Texas making a decision that all chargers in Texas will have to have the NACS, the Tesla nozzle in order for it to qualify for federal funds. Lots of little pieces of news like that are good, but the truth is there's really been no news. And so what happens is that they're chewing on these price reductions in China and the price reductions in the S and X variants in the US, the new variant that was offered. And so the market is waiting, sitting and thinking, okay, when's the next shoe going to drop on these price reductions? That they don't like. Tomorrow, we're going to get the leading economic indicators, and I don't know what to wish for. Actually, I do. I want to have a beat. Right now, the street thinks that the leading economic indicators will be 0.4% down after being 0.7% down last month. I'd like to see it up instead of down. No idea where it's going to end up. Philadelphia Fed manufacturing survey is headed down too, according to the street's estimate. Last month, it was negative 13.5. Street is estimating it'll be negative 10 this month. Anything below zero is a contraction, but being down 10 would be less than, it was down 13.5, so that'd be good news. Not really. What you want is it for it to be up. Walmart reports tomorrow. Same as above. Good news is they beat and give good guidance, but in this market, that might be bad news. So either way, you need to be paying attention to that. So where are we at this afternoon in the pre-market? Oil, as I said, dropping below 80 to around 79.2. I'm somewhat surprised to see it drop about $4, over $4 this week. Really helpful because we're going into the off season on gasoline. And so gasoline prices could start coming down because of the oil drop, but also because we're going into off season. Gold, silver, copper still headed down, as I mentioned earlier. Point of reference only, Bitcoin dropped below 29. Tell me in the comments below, what does that mean? Is that an important thing or not an important thing? I don't follow Bitcoin, so I don't know, but I did notice it is down under 29. Bonds looking directionless with the 10 and 2-year yields a bit down in the pre-market. So where do we go tomorrow? Well, stocks are barely up in the pre-market, but they've been down in the pre-market. So who knows? Tesla's down a bit in the after hours with options expiring on Friday. I am not going to be buying or selling anything this week, even if I had my powder dry. That's me. That is not investment advice. I do know for a fact, not investment advice, that we are now at a point where the downside risk on Tesla has practically evaporated to zero, with the retrace now almost to 40%. That's a 200-point gain from 100 to 300, and now a $75 fade. At $80, that would be a 40% drop. So I think we've pretty close to exhausting the Tesla drop. Yeah, could it go down another 20? Yeah. Somebody asked in the comments today, could it go back to 100? And I said, absolutely not. I mean, who knows? You know, again, it's everything counts. The macro, the market, how people are perceiving things at any given time in terms of being nervous. Yes, of course, but do I think it will? I don't think it'll go under 217. I think 217 is a hard stop. Other people are saying 225 is a hard stop, or 223. Different people have different opinions on the technical side. All right. This is another thing I know. We're going to 350. Even from this 225 level, we're going to 350 by November 10, unless the Cybertruck and the Highland are not revealed by them. And I don't think that's any possibility. I think both will be revealed well before that. And we're going to the all-time high in January unless Tesla has a massive surprise to the downside on margins. And I don't see that happening. But as you know, we could have another strain of COVID come in. We could have the war in the Ukraine go crazy. We could have some new craziness like Moody's and Fitch and things like that just come out of nowhere that nobody has on their drawing board in terms of their expectations. So what is always 100% expected? The unexpected. So be sure to check out my earlier video today on right after the Fed minutes came out, see the card above, and then be sure 100% to hit notify so that you don't miss the rest of the series starting tomorrow, going through Friday, and then on Saturday morning, finishing up, talking about what's going on in Asia, because it's going to impact you. I promise you it is. And you should know now how to kind of play it and understand it and expect as it goes forward, at least as best as we can analyze it with 4 folks that do have a lot of experience and education in the area. Love to have more folks joining on Patreon. It takes a lot of work to put together these shows. Do you have any idea? I mean, it's a full-time job now. I'm turning out 3 videos a day. It is a more than full-time job. I'm spending more than 40 hours a week in doing the research, the analysis, and then the production. It's more than 40 hours a week. I have a team in the Philippines that I pay in order to make the video, to do some of the graphics and work on some of the videos and do some editing. Yes, they do other work for me as well, but that's part of what they do. So any help in the Patreon world would be extremely helpful. And you get a free book. You get a free copy of the Elon Musk mission. Yes, I'm going to remind you again, 20% of it is passé. It's already happened. It's done. There's nothing to see there. 80% of it will be a wake-up call. You'll go, oh my gosh, I wish I'd known that earlier. Or, oh my gosh, that's going to happen next. Well, in fact, I've got a video coming out tomorrow you may want to see. I'm sure you'll want to see it, about Optimus. And we talk about something that I say in the Elon Musk mission that still is in the future. And maybe you should have read the Elon Musk mission to find out about it. So you could buy the Elon Musk mission straight out. It's like $5 or something like that on Kindle. maybe $12.95 or something for the softback, maybe 16. I'm just guessing. $17 maybe for the hardback, or you could get it for free on the audio. I think it's $15 or $18 for the audio vision. Or you get it for free when you join up and become a paying member on Patreon. So there you go, some options. Down in the information below, you can find the link to the book. You can find the link to my Twitter. You can find my link to X, and you can follow me there. And you'll also find, though, the link to Patreon, where you can sign up and help support the show. Become a producer. You be one of the producers for the show. All right, that's it. I am done. I'm out of here. That's it for today. It has been great.